Hi and welcome to this live currency strength indicator table video with me, John, on this Tuesday the 7th of February. Here you can see we have our tables in front of us. We have two types of tables. We have the trend traders table and the day traders table. These are showing the same studies but just highlighting different time frames. Some of the currencies here are highlighted in green. That means there is a correlation between the two time frames, and that's where we'll be focusing our attention in these videos. The tables auto update every 15 minutes 24/7, meaning that our members can see how the markets stand right now in real time. And we're going to be looking at what those tables are showing us today. So we can see that the US dollar tops the table, still being the strongest currency on both tables. That is followed by the Canadian dollar as the second strongest currency on both tables, as well as the Swiss franc, which is the third strongest currency on both tables. The weakest currency on both tables is the pound, being W1. That is then followed by the New Zealand dollar, on both tables being the second weakest currency. Now, we focused on pound yesterday. I will cover pound US dollar again in this video because price is coming into an interesting level. So I do want to kind of pre-warn you that pound is coming up. We are going to discuss Kiwi US dollar and then an old favourite of ours, which is Kiwi CAD, because we talked about a potential opportunity on this market which played out really nicely. So if you're asking yourself the question, how do I find a currency pair to trade today, then you need to head over to our website. You can sign up for a £1 free trial to see how the live currency strength indicator tables can be implemented into your daily routine. So this is what the tables are showing us today. Let's jump into a few charts of interest. So New Zealand US dollar is one I'm going to focus on right now, and we can see that price has been trading to the downside ever since we kind of formed the recently formed highs, or retested the recently formed highs back up around about the 0.65 handle. Price dropped to the downside here. Now, we were looking to see if it would test the 0.6550, which were these highs back in June of 2022, but we didn't quite make it up to that level. Instead, price came a little bit short. We then had positive data out of the US with regards to the non-farm payrolls. This really sparked the dollar into life, and this then saw New Zealand US dollar break to the downside here, and now we've come into an area of support. So you can see I've got this trend line mapped in here on this daily chart with these lows back in November and then the lows through January, and that trend line has then seen price come into this area again. So are we going to see a little bit of a relief to the recent sort of downside pressure that we've seen, and if so, where could price come into before potentially seeing some further downside? Because we do have some nice confluences here in terms of support. We have the 200 daily moving average, which rests at 0.6195. We also have the 0.62 handle, which were these recently formed lows in here. So that to me is a good area to target for short opportunities. However, we are at a little bit of support. Now, if I go to the 8-hour time frame, you can see that the 0.63 handle was an area of interest for us. It was around this swing low here. It was also some lows. If I was to stretch that back out, you could see that it was resistance and support in here. So I like that area to see price kind of retest, because it kind of came in line as well with this trend line that we just spoke about on the daily time frame. So I'm looking to see if price will kind of recover a little bit of these losses that we've had before seeing a continuation on Kiwi. Alternatively, I want to see 0.63 broken through, and then maybe we'll get a retest on the other side before seeing some downside. Either way, I'm looking for a safe place to put stops, because if I was to kind of go short now, the safest place to place my stop loss would be at 0.6540, which isn't good enough really. You know, the risk to reward ratio, or reward to risk ratio, then really diminishes. You'd have an over 200 pip stop, and your targets would only be 120 pips. So it's a negative reward to risk ratio. That's not what we're looking for. We want to be positive on that, at least 2 to 1 on a potential opportunity. Now, if price was to pull back up into this area here, around about the 0.6450 handle where we had this breakout in the market. We've also got this kind of area where the market stalled before trading through the kind of consolidation pattern here. If we were to get a retest around there, then our stop loss reduces massively. We'll have like a 90 pip stop with a sort of 250 pip reward. So that would be a lot healthier reward to risk ratio. Again, if we kind of traded through, retested, we'd have a safe place to place our stops before looking for the opportunity. So that's what I'm really looking for. When I look at a market, where's the sort of area where I would want to be short from, if I had, you know, which gives me the sort of high reward to risk, gives me the safest possible trade, and that would be back up at this area here. So what I'm trying to say right now is it's probably not a good time to trade Kiwi dollar just yet. You probably want to wait to see price come back into one or two areas, or at least trade through an area to give you a safe place to place your stop losses before looking for an opportunity. So one or two options there: a pullback to the 0 spot 64.50 handle, or a break of the 0 spot 63 and a retest. So that's what I'm looking for here on Kiwi US dollar. Now, I did say I'll talk about Kiwi CAD. Now, why am I really interested in Kiwi CAD? Well, it's really been one of our favorite pairs to trade. It's on the weak side of the table this time, but throughout the majority of the year, it has been on the bullish side of the table, and going into sort of the end of last year, it appeared on our tables around this area for long opportunities, and price rallied over 600 pips to the upside. Most recently, it kind of featured on the bearish side of the tables, and in fact, the last time it featured, we looked at this opportunity on this break here, and what we discussed was price is either going to be accepted back in the range and continue down, or we would get a rejection here and we could look at shorts back at the swing highs. Now, if you waited for price to come back to the swing highs and look for the short there, so let's say around about the 0 spot 86.70, you had a really nice trade down to the area which were our targets, which were the 0 spot 84.50 handle. Our stop loss then was around about 75 pips, and you can see the reward to risk ratio of that, and that's waiting for price to come to a higher price, rejecting, safe place to put your stop loss, looking for your higher reward to risk trade. Now that price is back at the 0 spot 84.50 handle, we need to wait. So again, very similar to New Zealand US dollar, I want to wait to see if price climbs back again, maybe even back towards the 0 spot 86.25 handle. You've got this kind of stalling point again, or I want to see price consolidate here, fail to find some buyers, trade through the 0 spot 84.50, retest this zone, and then continue to the downside. It could even come up to the high of the zone, and as long as it rejects, I'd be looking for continuation down to the next level of interest, which is the 0 spot 83 handle. So definitely one to watch still there for Kiwi CAD, but just wanted to point out that if you followed the previous analysis, you know, there was 220 pips up for grabs there. Now, we talked about pound US dollar yesterday. The reason we talked about pound US dollar is because it topped our day traders table, and we were looking to see if that momentum in the market would continue to the downside, and we kind of discussed the fact that we're approaching some key areas of support and resistance. Now, I've just added an extra level in here. You can see I've kind of altered my trend line slightly. We were originally going through this sort of area here where we saw the sort of breakout there, but I've realigned it so it kind of came into line with this low that was formed back in November, and you can see that price is coming into that area at the moment, which could explain why we're finding a little bit of support right now, as well as the fact we are at a key area of interest, which is the 1.2 handle, which is a significant level on pound US dollar. But what I quite like is the fact that we've got this trend line support, we've got the 1.2 handle, and then we've got the 200 moving average at the 1 spot 19.57. So that could put a little bit of a stalling point on anyone selling at the moment, and what I don't want you to do is see the momentum on the currency strength indicator tables try and get short on a breakout here when you've got support right below, because what we may see here is price jump into this area, attract or invite a lot of selling, and then price reverse to fill these sort of areas of interest where the market was previously. What I really want to see is price come all the way back up to sort of this range in here, which we explained yesterday, and then looking for a continuation around that point. You know, targets I still feel are the one spot 1850. If we trade through that, we've got the one spot 15 as a potential area of interest as well. So I still feel like the downside is there for pound US dollar, but I do feel like this market needs to pull back in order for us to get a good trade in this market. So hopefully that all made sense. Hopefully you enjoyed the content today. If you did, please leave this video a thumbs up if you are watching it on YouTube, and subscribe to the channel. If you're watching this as a member, hope you have a great trading day, and I will speak to you in the next one.